All right, everyone. Tax time does approacheth, unfortunately for many people. So I've got Chris Whalen. He's a certified public accountant here, and he's here to give us some money tips, talk about the Trump tax reform, business taxes, deductions, and all of those confusing things that 99% of the population, like, we have no fucking clue about, really. There are links in the description to a number of sites that he has. He's got a Gab page, BitChute, which I think is very wise, Minds, and all of the others. He's also actually got a book on Amazon, and the first thing that I wanted you to briefly describe, if you wanted to, and this, I know has nothing to do with economics per se, is really the content of your book. It's called Foxhole Fathering.
Yes, sure. Well, it's Foxhole Father, the field guide for fathers, and it really I wrote it for my three daughters who are now adults, but it's written specifically for men. And it just gives advice on everything related to fathering. So, for example, I wrote the book in terms of every chapter could be a situation you're going to come upon as a dad, and my advice on how I handled it. And because a lot of dads, a lot of them are insecure, as I was when I had a baby, and they're not sure what to do, and they sometimes defer to a mother, which is okay sometimes. But yeah, it's selling on Amazon, and it's selling very well every month now. And so if you have a dad in your life, or someone's going to be a dad, and they're looking for some masculine, direct advice from that perspective, that the main part of the book for men to realize is that you don't have to feminize yourself to be a good father. Children need a mom's feminine presence, but they also need a dad's presence from the masculine side. And that's sort of what the book is about, that taking, like, from a guy like me, just like you, having no experience. I never held a baby before my first was born. So starting from scratch, how do you then have a healthy baby and have confidence as a dad? So urge everyone, it's on Amazon, Foxhole Father, the field guide for fathers. And it's sort of a project that I love, especially because it's for my kids, and it helps me I work with a lot of dads around the world that write to me about it. And it's very fulfilling, separate from my regular business.
Yeah, it's a multi-talented, multifaceted, definitely. Now, we need to get into tax talk, which is, of course, something a lot of people don't even want to acknowledge that it exists. It's sort of a yearly hassle for a couple of days, and then they sweep it under the rug and pretend that they won't have to do it again. You wanted to talk about specifically changes to the tax code and things of that nature. And then later on, also for people, I think we're planning to get a little bit into cryptocurrency as well, which I know is a big thing for a lot of my viewers. They've been urging me to talk about it, but ultimately, other than having a wallet and taking crypto donations, I know relatively little about it. So you can speak to that from maybe the perspective of actual taxation as well.
Sure. Well, there's definitely some pitfalls with the crypto. We'll get into the people who make mistakes in terms of some of their initial basis in their coin. So we'll talk about that later. It's some good pitfalls to avoid, because sometimes people who are reporting their crypto are paying too much money because some of the basis isn't there. So if you see their gains are too high, but I'll explain that later when we get to that.
Yeah. So I think we'll start out by some basic changes to the tax code, maybe starting with the child tax credit, actually, because presumably there are people watching here that have kids, and that might actually affect them.
Right. This is very important because traditionally, in general, if you were a couple and you made over $110,000 together, then you really were excluded from taking the child tax credit, which at the time in 2017 and prior was $1,000 per child. So now with the tax reform, what it did is that it boosted up that income limit to $400,000, which now is going to include many, many more couples, or even single people, single parents. But it also doubled the child tax credit. So if you're a couple, say, making over $150,000 with a 10-year-old, so you would not have gotten a child tax credit last year, most likely. Now you're going to get suddenly, along with what the refund would have been, what you're expecting, maybe an extra $2,000 in your refund for next year. So it's very important that your tax preparer is on top of this, and their software is up to date with all of these changes. So child tax credit is something where that's a lot of money for people. $2,000 is sometimes 20% of your tax bill for people making $150,000. So people shouldn't. I'm going to get into that a little bit more too. If I can lead into the decrease in taxes with the Trump tax plan. So
absolutely.
Last time that. So everyone has to remember that the payroll tax tables were changed because Trump changed the tax rates, lowered them. So many people did see an increase in their net paycheck due to that when all the payroll tax tables and ADP were changed. So Now, we have to be careful, though, that sometimes we need to make sure, though, it's adequate. So I've urged everyone forever since talking to you, and every presentation I give, everyone should now take a look at their year-to-date pay stub. We've had all of these paychecks for months now where the Trump tax changes are included, and let's make sure it's adequate. Talk to your tax preparer. Do a quick a spreadsheet to see, do I have enough withheld right now? We don't want to be surprised in April.
So what are the biggest changes that people should expect when they file their taxes as opposed to last year or any years before that? What are the like three most major changes overall? With the child tax credit, I have to assume is one of them.
Yeah, yes.
What would the other changes be?
Well, the other changes are regarding the SALT deductions, which are the state and local income tax deductions. Now, what they did is they put a limit on those. So that's property taxes and also income taxes you pay to your state. Those two categories combined are maxed at $10,000. Now, you might have heard a lot of the news about high tax states like California, New York, and New Jersey would seem to be hit by that very hard because they pay very high state income taxes and high property taxes, two categories that seem to be hit here. But the main thing you need to remember is that, yes, if you look at that one section of your tax deductions as, in a vacuum, yes, of course, I'm losing some deductions, but you have to look at the plan overall that 95% of my clients, even people losing these deductions, are still faring in a better way than prior. So tax rates have come down drastically. Also, the margins have moved. So in our tiered tax system, you start at 0%, then maybe go to 10, 15, 20, etc. But imagine that all of those rates have come down a few points. That would save money. But then also, when you go into those higher rates, it takes longer. So for me to go from 10 to 15%, instead of being at 40,000, I might be at 60,000. So I'm staying in the 10% bracket. Also, the AMT has been almost eliminated for most middle income taxpayers. So even with, I've had clients who are going to lose $35,000 of itemized deductions. They are still not in the red for taxes. So don't have everything looked at. The way the tax code is working now, it's meant to accommodate if you lose those deductions, we're getting something back at the bottom end. Does that make sense?
Yeah. And one thing I think a lot of people were concerned actually with regards to the tax code. You remember when the Democrats were attacking it and saying, "Oh, this is bad for the middle class. Some of these people pay more." It's focused on just the one percenters, the so-called rich of the Republican Party, not the bankers, maybe the billionaires backing the DNC. I don't know if you have an opinion per se about this. What do you think will be the political fallout if people realize that that's not actually true, and when they get their returns, that doesn't happen? It's not fiscal Armageddon for the middle class, and actually is beneficial.
Well, and this goes a lot to the values of real estate, right? So remember, so these property tax deductions being minimized. Remember, a lot of people believe having the property tax to be able to deduct property taxes is something that's intrinsic to the value of the home. So suddenly, oh my God, they're reduced now, the deductibility. So that means that my value might go down, but that's not true. So what I think is going to happen, number one, the net effect of the Trump tax plan for tax season 2018, which is going to be April 2019, is going to be a windfall for most people. I've done hundreds and hundreds of returns, and I can't see, and I've done projections on all of them. I have maybe 2% where there's a negative. So I think with the child tax credit too, I think that if anything, it's going to be a boom to home prices next spring because people are nervous right now, right? They don't know what's going to happen. Imagine you're a couple in May of 2019 and you're getting as much of a refund as you thought, plus a child tax credit. You can buy the house you want or better. So the more disposable income people have, which is going up on average, there's no doubt about that from my end. I do this for a living. Then it's, of course, that has to increase the value of homes because there's more buyers in the market, right? It becomes much more of a selling market. So I think the Democrats, if they're feeling that, and they've been pushing this, like I said, this little item in a vacuum about the property taxes, but that's a very small component. I think that they're going to look bad when the spring comes and the new tax filing season's over.
And for those that didn't purchase health insurance, I believe the 2.5% up to 2.5% penalty is actually eliminated now, correct?
Yes.
That's no longer in effect. Trump ended it for this fiscal year.
Exactly.
So in some cases, I mean, if someone's squarely middle class, that probably would have been a couple, $1,500, maybe $2,000 that they're not paying. It's a lot.
It hurt the middle class the most because middle class they're they aren't as likely to have health insurance as someone in the upper tiers of income.
Oh,
So
I know I'm included in that. Like actually the project, by the way, to people who don't know, Chris Whalen here ran a projection last year for me and would have been exactly correct if it hadn't been for the mandate, which I don't think I mentioned to you that I didn't have health insurance. So that was my fault.
All right. So I think that, again, it's not fair. Like I tell people, if you look at news articles or interviews on television talking about the new tax code and the impact, they never show details. Listen, I don't guess anything. In my line of work, I have a fact pattern I can show you. Someone went, if you look at my website, I have great examples of a couple making $230,000. Oh, how do they fare in the new plan? And people go watch that every day. So in this case, that's how you know they're disingenuous, is that I have the tax code. I can easily check from 2017 to 2018, what's the impact. So if there are no facts and no examples and case scenarios given to you in either an article or an interview regarding the new tax plan, ignore it.
So you're sort of like a scientist conducting research too and studying these tax patterns over time.
Of course.
I think one thing in the legacy media's defense, a lot of the people that are still watching CNN or Fox probably wouldn't have the attention span necessary to pay attention to your graphs. Their eyes would glaze over within 5 seconds. It'd be numbers. Oh my God, I'm not in high school anymore. Please no.
Yeah, it's I've tried. I mean, I've written to them, and of course, I'm just a small person here working in New Jersey. Yeah, but I agree with you. It's just it's ridiculous. If you look at my small production here in my office, and I give you a case study in 10 minutes, it really educates people. And that's all I do here. My main goal is my blog is not fluff. It's not selling. All the media I post, my podcasts are all real information you can use. That I take the research we do and I give it away for free. And of course, it comes back at me a millionfold in terms of new clients.
Yeah, you're like the resident fiscal expert here, actually.
Oh, okay.
And it'll be like yearly tax time prep talk and everything. I did want to get into cryptocurrency now, though, if we can, specifically on the taxation side, and maybe also maybe first just give a general prediction. I don't know if you're willing to do this, but I'll ask you anyway. Do you think that they continue to drop, that is the crypto prices, or rise? Is it a bull market, so to speak, or do they sort of stagnate where they have been for maybe the last month or so?
Well, it's interesting. I feel that if the bigger banks, if they get involved, I think that's a negative, of course, right? We want less oversight. So I think it all depends on how it's adopted and by whom. Right. So the more that you get bigger banks involved, the more it's going to look like it's an IMF situation. So I think that it's fantastic, especially for third world, or second world economies. I think it's fantastic. I think it's a money making opportunity for everyone there. So I don't think that it's going to go down to zero. I think that I don't know why people would say that when there's so much enthusiasm. We're just this is an infancy thing, right? This is I can't explain it. This is, I mean, a decade from now, it's going to be totally different. So they're just finding their way, right? But this is just, there's no doubt it's better for people. It's better for freedom and liberty. And it gives people around the globe who don't have our infrastructure of banking and an opportunity to be an entrepreneur. And there's billions of them.
I know it's funny to hold a fortune in a USB drive, maybe.
Yeah.
But that actually reminds me of something. I was gonna think of asking this. What about the Petro, the Venezuelan cryptocurrency? Is that something that you think has any relevance whatsoever? Or is it sort of Maduro's way of trying to bail out his own economy?
Well, I think it's a socialist coin. That's how I characterize it. So I don't think that
they've already got national socialist coins. So.
I don't think it has a chance, and it's just odd that someone would even have tried that. If they understand crypto and the mentality of people who are investing in it and believe in it, they would never have done a coin like that.
Yeah. Well, isn't it supposedly oil backed? I think,
right.
Or something.
Well, don't forget they have to have enough money to get it out of the ground. Right.
No, I know some of their rigs have actually collapsed. I think that's caused prices to go up a little bit. So with regards to crypto, what would cause, what actions can you take with regards to it? Explain mining it, receiving it, selling it, and exchanging it. Those 4 basic actions. What sort of tax related or fiscal responsibilities does a person have when they engage in those 4 behaviors, generally speaking?
Sure. Well, first of all, again, even though it's called a currency or called a coin, it's not thought of as a currency by the federal government or any other sovereign nation, right? So if it was a currency like the euro or the US dollar, the tax, I can exchange it all the time and then have a tax impact. So that's one thing, main thing to tell everyone, that it's not a currency for tax purposes. So it really is property. So the most important thing, and I mentioned this earlier before, we have to know what the basis is of the coins we have at all times, because that's going to go towards eventually a gain. But if, for example, if you're mining it, let's go to your first part of your question. If we're mining the coins, when I get a coin or a partial coin, that is self-employment income to me. Now that's separate from then having a coin now as an asset instead of cash. So if I get, let's say I got $1 in Bitcoin from mining. Okay, great. So that's income to me. That's self-employment income like I have and you have, right? But then also that dollar becomes the basis of that coin. I'm holding it. So let's say I held that coin for a year and I exchange it for Ethereum for $1,000, right? I have a $999 gain at that time without receiving any cash. That's the important part people don't realize. If I'm exchanging that for cash or for coins or anything else, I have a taxable transaction. So what happened here is that people were sort of day trading coins like they did stocks. You know, day traders could have 10,000 transactions in a year and make $5. So, but that's similar, right? People come to me with spreadsheets that are 20,000 lines long. So it's very similar. So we have to know, and there's good tracking software online, but every time you exchange the coin for anything, you're going to have a taxable event.
So they need to be careful of that, because if they're doing a million microtransactions, they could be screwed.
Right.
Is there any way that they could also deduct anything? Like if they go to the IRS and they say, well, I didn't know that making this 10,000 transactions was going to get me $100,000 in actual taxes to pay. Is there any chance Uncle Sam will show leniency? Like, is there any signal from Trump that he understands people's folly?
Well, yes, I think that they understand that, and they might be lenient if you did file. Like I have some people that are like, I do prior year filings a lot, something we do here as an expertise. So I have people that have come to me with 2015 crypto they didn't realize. I've done 3 or 4 years. So, but you have to file a return. There's a lot of crypto forums out there where people are getting bad advice. Oh, they'll never know, this law is wrong. This anarchist idea. I'm like, no. The IRS is going to get this information, even if they don't tell you. They're putting a lot of pressure on the Coinbases of the world and other tracking and other wallets. So if you have these transactions, the IRS is slow. It might be 2 years from now, but if you've traded and not shown that on your tax return, they're probably going to send you a letter that's going to say, hey, listen, you traded a couple of $1 million. It might not be your gain, but they don't know that. They'll send you a letter that says, oh, there's $1 million gain and pay us $400,000. So you don't listen. You have to file your tax return, because I think they'll be lenient a little bit in terms of penalties. But I think with the level of transactions you have in terms of dollars, you have to be very, very careful if you don't file and you purposely don't.
So, and what would happen if you receive, like, for instance, I accept cryptocurrency donations. Now, because the value of that crypto is malleable, how would that be calculated? Is that, number one, taxable on the recipient's end or the sender or both? And number two, what would the number be? Like, let's say you get $1,000 worth of Bitcoin. As of the net, you've held it or whatever, and now it's only worth 500, or it's worth like 10,000. What number do you actually put on the taxes?
It's like getting anything else. If you got goats, for example, I have 1,000 head of goats worth $1,000. At that moment, it's $1,000. So that's why it's special accounting. Like for someone like you or me accepting crypto, the moment I get it, there's a fair market value. It could grow to $20,000 from $1,000 original price, but there's no gain on that until I sell it. So that's the good thing about it. So at the moment you get it, you need to record it as income. If the fair market value changes the next day, that has nothing to do with your income. So
you file it as you received it.
Right. At that moment. Because it's so volatile. I mean, I can't. So right, even if that's part of it, that's why you accept crypto, right? The idea is, listen, I could take in $1,000 of crypto. What if it bumps up again? Well, it can go up 20 times suddenly. I could sell some of that. Remember, then that becomes a separate gain transaction, like we just talked about.
Yeah, and then you're taxed again. I know that.
Right. The income is separate from eventual sale and capital gain. So I have clients now that are taking crypto as well as cash and other currencies, right?
Yeah.
So we take the money in that day and we put sales in at the fair market value, but we have a whole separate crypto account, of course, and that could be adjusted by fair market value. But our profit and loss side is based on the fair market value, the moment of receipt.
So definitely I should claim the crypto that I've already received for the fiscal year as it was. And if you don't have a ledger of each transaction because you're getting small donations over time, if you're roughly on par, you know roughly the value it was, is the IRS likely to come after you for like a $10 discrepancy?
No, if it's reasonable, because they don't probably have the tools really to follow it anyway. I mean, agents I'm dealing with, the people I'm sometimes educating them.
So they're dealing with the big numbers and not, you know, each one of 10,000 microtransactions. It's more general than that.
You have to remember too, people make the mistake with the IRS. They often think of the IRS just as a money collecting entity. It's really not. There is the Tony Soprano collection agency for them over here, but they're really compliance people. So the IRS would just, let's say they audited someone and they have these crypto transactions. If we show the support for things, they would just as soon walk away with no change. So that's why filing on time is important, even if you don't have the money to pay, because they want the paper. If you owe money, great, they'll send you over here to collections. But that's what people get worried about, filing on time. They don't have the money to pay. No, you want it to be in good form and on time. That's why late filing penalties are higher than late paying penalties sometimes. The paper, just to check off the box. Oh, you owe $20 million? Great. Go over here and talk to Tony.
Yeah, you may not have both kneecaps after this conversation, but you'll probably still be alive. So it's still a good day. Now, also, I think some advice, and I think you'd agree with this. If you're not able to pay the full amount that you owe, just pay as much as you can, correct? That's very important because that lowers the amount that obtains a penalty as well.
Exactly. And over time, you know, there's still penalties, but the interest rate's pretty low. It's tied to the Federal Reserve rate. So you have to remember. Which right
now is pitifully small, right?
Don't believe you hear these ads on the radio. People owe money over $10,000 and they said, oh, we can get your tax debt reduced. And it's really not possible. Usually it's really a lie, because if you have the ability to pay, the IRS has no reason to reduce the tax you owe. They might work with you on penalties. So a lot of these places take $10,000 from you. They say they're going to try to reduce your tax with an offer in compromise. Then they come back 6 months later and say, oh, we got you on a payment plan. It didn't work. But we could have done that for a tenth of the price. So, So if you're nervous about anything, I urge everyone that's listening now, please contact me. Go to my website, write me a question, call me. For Styx's followers, I'm here. So don't be nervous, and don't let your nerves have you make a bad decision by giving a large retainer to an accountant when it's not necessary.
So the IRS is Tony Soprano, but it's not Tony Soprano plus 10,000 other dudes who are immortal.
Right, exactly.
It's a boogeyman, but it's a manageable one.
Exactly.
And now, were there any other major changes to the tax code that you wanted to discuss in particular?
Yeah, well, there's one that Trump gave a very large corporate tax cut. Everyone heard about that, and it was maligned in the media. To reduce the corporate rate to 21%, which I think is great because it brought us in line with more of the world, right? We had become the highest corporate tax rate. We used to be the lowest, and then we were the highest for over the past 30 years. So now he gave small business owners like us a possible 20% deduction in taxable income if you qualify for not over certain amounts. I don't want to go into that specifically now, but remember that it doesn't apply to self-employment tax or the FICA we pay as self-employed people, but it's a tremendous savings for everyone at the lower end. The normal people, middle-class people can get possibly 20% off. Like a lot of real estate agents I deal with, people like you, people like me could possibly take that too.
And what's that capped at? What's the actual limit roughly?
Well, there's if you're a single person, it's approximately 200,000, and if you're a married person, it's approximately 400,000.
Most self-employed people are nowhere near 200,000.
Right. So, but you have to do the forms right, and you know there's some, of course, it's a little convoluted with the IRS, we're still waiting, as I mentioned before to you, we're still waiting for the IRS rules to really come down so I can really analyze that.
And when will that happen, roughly?
I'm hoping very soon, hopefully in the next couple of weeks. So, and then I'll post something on my website as usual. I urge everyone, please go to my website and write to me and give me your email address, and you can get on my blog list and my email subscription. It's good information. It's never selling. So you will also, what's happening interesting with this 20% reduction. So I thought, and I think I'm right, I'm seeing it already, that let's say you work somewhere and you're at a desk and you have a consultant now comes in doing the same work as you. They hire a temp to help you out. Now that person, if they're on their own, if you're both making $50,000 a year, he or she next to you is getting a 20% reduction for doing the same work. So what it does is it pushes people towards wanting to be self-employed. Can you imagine sitting with someone next to you? So I could see that more and more people are trying to get out of employment agreements and make them more subcontractor agreements. So they,
by the way, as a libertarian, I think that's extremely positive for the country.
oh, I agree 100%. There's no doubt that being self-employed, if done the right way, again, that's all I've wanted to do since I'm 10 years old, by the way, is just be a self-employed person and being a libertarian since I'm that young. Yeah, so just has to be done right. There's a lot of LLC things that come up. People talk about LLCs and should I form one? And sometimes it's not necessary. Sometimes people want to sort of take your money and charge you to form things, whether it be for businesses or for rental. I do a lot of rental and property work. So really take your time and see, do I need to expend money? Forming a company should not take you thousands of dollars.
By the way, I see what appears to be a Nike meme behind you.
Oh, yes.
What is that? I was going to ask about that. That looks funny. You have to say something or else it's minimized on my end.
It says hire Chris Whalen CPA and sacrifice nothing.
That's pretty good. No, that's like one of the greatest modern memes. So yeah, unless there was anything else you wanted to cover, that about covers all the bases, I think.
I thought you'd like my H&R Blocks are for babies poster behind me. That's one of my memes I created. Well,
you're definitely a New Jersey cutthroat style there for H&R Block.
Well, it's Tony Soprano state, right? I got to live up to that. Don't forget, we have the alimony changes. I mentioned before that divorce is.
Oh yes, that is one good thing to cover because some people here might be going through a divorce.
Right. Divorce is being finalized after December 31st this year. Alimony is no longer deductible by the payer or includable by the receiver. And so this is very significant. If you're going through a divorce right now, especially right now, you need to talk to your attorney to make sure if you're calculating things that those are grandfathered in, even if you finalize after this year. So, and I urge everyone, especially recipients of alimony, if they're going through a divorce now and you're thinking about how much alimony net you're going to have, remember, it's a drastic difference between taxable and non, and you have to look at the recipient's net after tax. So I urge everyone, especially with alimony coming up. The other thing is unreimbursed expenses, if I can mention it. Mm-hmm. Now, the unreimbursed expenses are for employees, not self-employed people who have expenses for their work that are not reimbursed, and they can take them as an itemized deduction. Usually, sometimes they're pretty heavy. Those were eliminated because miscellaneous itemized deductions were eliminated, and so that is one area of the law where people get hurt all the time if you have them. So I urge I have a memo that says if you have them, you need to renegotiate your employment contract. Because think about it. If I was making $100,000 as a regional salesperson, I have $15,000 of out-of-pocket costs. All right, so my taxable is $85,000. Now I'm losing that $15,000 deduction. So I have a taxable $100,000. So that could cost you $4,000 or $5,000. So I urge everyone, if you have unreimbursed business expenses, to really look now what type of net problem you might have, and also to speak to your boss about really going over your contract to try to make it more fair for you. Because when these agreements were made, it's assumed what the tax code was. But this is so dramatic. All of those contracts have to be renegotiated. That's what I tell all my clients with unreimbursed expenses.
Yeah, so that sounds like some sound fiscal advice. And once again, as well, links in the description of this video, whether you're watching live currently or whether you're going to be watching this once it's been recorded and it's fully shared out. Gab, Minds, BitChute, Steven. I think there's a site called Mastodon, which I've heard of, but I'm not exactly sure what it does, as well as Chris Whalen's website. You can go there for additional financial information. And my friend, it was very fun to talk to you once again.
Thank you, Stix, and thanks to everyone. I look forward to talking again.
You got to say peace out.
Peace out.